Alright, today is Saturday, but we're going to be reviewing yesterday's price action from Friday. First thing I wanted to point out was this possible sell here. So after we opened, I like to look for double tops and double bottoms around the open, and then those can often lead to some good swing trades. The market opened, we moved higher, touched the moving average, went down, moved higher again, and we double topped here at the moving average. So we're finding resistance at this price, and the range so far has been small. Right, we can see from this high to this low, this is pretty small compared to prior days price action. So whatever kind of range we're getting here, it's probably going to double in size, or in this case, probably going to more like triple in size because this is so small. So I want to be looking for a swing trade on the open, and I think this is a reasonable shot at that because you get a double top at the moving average. Bulls have tried a couple times to go higher, and if it goes below this bear bar, there's a good chance the bulls will give up below that, and that could lead to a swing trade down. So I'd be looking for something like this. So that'd be 2 times your risk. Obviously, you could have gotten more than that. Another thing to keep in mind is this red line. So the overnight low is below. So if we're selling here, then we're selling also knowing that we have targets below, like the 200 moving average. We have the overnight low below. So there's reasons that the market might want to come lower and test these areas down here. So that makes this a better kind of a swing trade. So we get some pretty good selling out of this. 6 bear bars, all pretty good size, closing below their midpoint. So when you get something as strong as this, what does that tell you for the rest of the day? That usually means the day won't become a strong bull trend day. So whatever kind of buying is going to happen later in the day, most likely it's not going to lead to a strong breakout and come up here. So that increases the chances that I'll be looking to try to take shorts. One short, for example, would be doing a limit order sell above this bear bar here. So we have 6 bear bars down, and now we've had a pullback, this bull pullback. Most likely, this first pullback is going to be sold in some way. So traders, after seeing this, they'll say there's probably a little bit more down. There's probably going to be sellers through here as the market gets back to the moving average. So they'll look to do a limit order scalp. And what's the minimum scalp that I would go for is 5 points. So if you're selling here, so let's say you sell just directly above the bull bar. Okay, so that'd be 76.75 and 5 points. So you'd be getting out right down here 5 points lower. So that'd be 5-point scalp. The bars are larger, so it's probably okay to try to go for a 10-point scalp. And so if you're doing that, you would not have gotten out on your short here. But what traders will do is they'll sell more higher. So they sell here, maybe they'll sell 10 points higher. And so they'd be selling more up here, and then they would get out at their first entry point. All right, so the odds that that's going to work increases once you see the big sell-off like this. Because after this, you can say, okay, it's either going to be a bear trend day, in which we can sell at any point and we'll make money, or it's going to be a trading range day, in which we can sell at any point and make money as long as we're willing to scale in higher. And so that's what you would do here. So either you get out with the scalp when it pulls back here, or you'd sell higher, either here or over here, and then you would get out when the market reverses back down. So that's the information that you can get when you see something like this. So that's kind of where your mind should shift to. I'm not saying there's going to be some good longs in here, because there are some good buying opportunities. But this is kind of a really important point of, what is the market doing? And the market is being bearish. It's either being bearish or it's going sideways. So it's probably best to try to just look for shorts until the market does something different. Something I used to do that I found to be a mistake is look at these several bars up here. So we have about 7 bars up where the market does not go below the prior low. So there's some pretty good buying in here. And just like here, right, we had some pretty good selling, and I was talking about selling above into this pullback. But what about buying here below this bull bar? And because we had several bull bars up, we haven't gone below prior low in a few bars. So what I used to think, what I used to do is that there would be buyers below this. Now, ultimately there were, you'd have been able to buy here and make a profit. However, so, I'll give you a rule that I use now. So I'll write it out. So my rule: do not limit order buy right into the moving average. Okay, so it would be like buying right here below this bull bar. Okay, so you see the market's moving down, and what's it pulling back into? It's pulling back into the sell zone. Okay, so yes, we have these several bars up, and some people might buy below there, but we're actually in the sell zone, so there's going to be more sellers in this area. So if anything, if I'm doing anything, I'm looking to try to get short. I'm not looking to try to buy, because either we're in a bear trend and we're going to be high up in the bear trend here, right? This is if we're in a bear trend, this is probably the start of the channel down. Or if we're in a trading range, we're probably high up in the trading range. So even though we had these several bars up, I don't want to be buying here because we're probably buying high in the range. And so that's what this moving average can tell me, is that when we're buying right up into it like this, we're probably in the sell zone. So I've lost a lot of money trying to take limit order scalps like that right below the moving average. My text is a little, don't buy into the moving average. Okay, and that's one thing that you gain from experience or having someone else that can communicate these things to you. Is so either you can spend 10 years learning these little things like this, or it's better if you can have someone that's already been through it and they can kind of talk to you about these things. So this is a rule I have: don't buy into the moving average. That includes a limit order buy like this, right? I used to do lots of limit order scalping, and I still do it. I'm going to show you some limit order scalps, but I used to do it a lot more, and I would make these mistakes like this where I would have 7 bars up, and I'd say, okay, 7 bars up, that's probably a good buy below. But what you're missing is that this is actually in the sell zone. There's more sellers up in this area, and there's a chance that this is just a pullback and what is the top of the channel or what is the top of the trading range. So either way, it'd be better to not try to be buying there. So it would have worked, and if you could manage it right, then a lot of the times you'll still be okay. But I'm going to remove that because that's something easy you can take out of your trading bag. It's something you can take out of your playbook and immediately save yourself from some losses. So I'm going to show another limit order scalp, and it's going to be right above this bar. All right. So what have we had? We're still in this bearish kind of environment because we have not offset all this selling. Now there's a couple things going on at this point. One, if we draw a measured move from our range so far, here's our 50% pullback. And if you're selling right here, you're selling above this high, you're selling around the 50% pullback. At this point, you really have not broken above the moving average yet. You really have not broken above this 50% pullback. This is something common, is that the market will go a little bit beyond the 50% pullback, enough to almost trap traders into thinking we're coming up here, and then it ends up reversing back down. So just because you poke through it does not mean that you've actually broken through it. So keep that in mind. So we have a you call this one bull leg pullback. Then this is the second leg. So first leg pullback, second leg. This is a second leg trap. There's a chance that if you're just looking at it right here, you're not sure what it's going to be yet. But if I saw this, I'd say there's a good chance this is a second leg trap. We're in a bear trend, first pullback, first leg up, pullback, second leg. Good chance this is just a second leg trap. I can sell above. I can trade small and sell above and get a scalp. If it doesn't immediately go down, there's a good chance I can sell more higher. We're probably in at least a trading range day here, so and we wouldn't be selling too low in the trading range. So this is probably a good place to sell. And you'd have to sit through one bull bar, but then market pretty quickly reverse back down into this range that we have. So after this big bear bar, I think this is confirmation of the kind of environment we're in. So big leg down, couple bull legs up, and then another big bear bar down. Right, this is not going to be a strong bull trend day. Right, odds are it's either going to be a trading range or it's going to go down. The best the bulls can do today is probably come up and test this high. And if you're trading small enough, then that gives you room to be able to scale in higher if needed. So that increases the odds that you'll quickly make money, and it decreases the odds of you having a large loss. So after I see this bear bar, then it just further fuels the idea of that today is a scalping environment, and we want to look for limit order scalps or stop order scalps, low in the range or high in the range. So the next one I want to mark is going to be right here. Oops. So it is going to be selling above this bear bar. So look what you've had now. Big bear bar down. Then you get a follow through bear bar. So that's good for the bears. Now we're below the moving average. Probably going to be sellers above this bear doji. Right? Is this a good buy signal? Are you eager to buy above that? Probably not. Right? You'd be buying. Yeah. So at this point, I would call the trading range is probably something like this. So you'd be buying a little bit above the midpoint of the trading range. You'd be buying above a bear bar, this bear doji. So it's an ugly place to look to buy. You're buying into the moving average, right? Which that's a rule. Don't buy into the moving average. And so all these reasons it's a bad buy. If you can find a bad trade, then look to do the opposite. So it'd be better to sell above this bar. And pretty easily you get your 5 points or your 10 points. So that's a good limit order scalp right there. Now, what was I saying? The odds are that we're probably in a trading range or a bear trend. If we're in a bear trend, the bear trend is not all that strong, because yes, we got this big sell-off, but look at this deep pullback we got. The bulls were able to buy for an hour and a half, and the sell-off itself wasn't all that strong. A couple bear bars, then pullback. Every move down is followed by bad follow-through. So it increases the chances that you'll be able to make money buying. And so now we're down here, we're low in this range. The market loves to get down to these minor lows like here, and minor highs, like this high, this high. All of these little tails you kind of see in the middle of the range, the market loves to get to there because there's a lot of stops there. Right? People enter trades and they put their stops beyond these levels, and that's bad to do. I talk about that a lot in the course, and this is kind of a concept I go over. So these tails get hit a lot, and this is a great example of what the market does. The market, here's a minor low, it goes right below it, and then reverses up. It goes below it, reverses up, and here it goes below it, and then instead of continuing down, it just gets the stops that are below this bar, and then it shoots up, and the market heads up to the other side of the range. So when I see these minor lows like this low in the range, I mean, I could mark any of these, like here, for example, or here. So limit order buys down here below this, and so those are scalping opportunities. Right? When you get down lower in this range, that's what the market does. It kind of tricks traders into thinking the market's going to go lower, when really, if you're in this trading range, it's probably going to go up to the top of the range. Now, if it's going to end up breaking down lower, in this scenario, we can see there's probably a lot of room down to fall if it's going to go lower. So if I'm buying like this, I would probably be somewhat quick to get out. So if you see the market get down here and then we double top at this prior low, then I'd look to be getting out. I wouldn't want to try to hold on to it. So if there's a chance that there's going to be a big breakout, which there could be here, we have a lot of room to fall, right? Look at all this open space. Then I'd rather not scale in. So I'd rather trade small and then not even scale in with this one. So there's another rule. If there's a chance for a big breakout, don't scale in. But you can still get you can rack up a lot of points trying to buy low in the range like this. Another buy that I wanted to make sure I pointed out was this. 3 bull bars up. Okay, 3 bars up, and we still have room up to the top of the range. So we'll probably get a little bit more up after this pullback here. So there's another limit order buy here. 3 bars up, pullback, you buy below that low there, and then you're able to get your little scalp right there. So after that, I really didn't see trades that I liked too much. Yeah, once you get past like 2:30, you probably shouldn't be trying to do any limit order trades because there's not enough time left in the day to manage it. And then I don't really see a good stop order trade unless maybe buying above this, but I'm not going to mark it. But so we were able to identify that the market was most likely in a bear trend or a trading range fairly early. I mean, by 11 o'clock, we had a pretty good idea of what the day was probably going to be, and especially by about 12:10, we had an even better idea. Okay, and so if you just took limit order scalps, so 1, 2, 3, 4, 5, 6. So if you were just taking those and went for 5 points in each time, well, that'd be 30 points. All right, so even if you're trading just one contract, one contract, 30 points, $1,500, and you can kind of rack those up pretty easily. And there's even more trades on here that you could have done. Like I didn't mark buying below this bar or below this bar, or there's you could have been more aggressive and taken more sells. Although I think this would be appropriate for me. If I was doing a day with lots of limit order scalping, this would be probably how much I would do, like 5 or 6 trades or so. So even ignoring the swing trade on the start, you'd be able to collect 30 points out of just these limit order scalps. So if you can correctly identify the type of day, then you can really get a lot of points if you understand what the type of day is. Like if it's a strong bull trend day, then you should only be buying, and then you can get a lot of points when that trend just keeps on going in a direction. Or if it's a trading range day, you do the opposite, and when you can get lots of limit order scalps. And once again, you can collect a lot of little limit order scalps in here, and that by the end of the day adds up to a lot of points. So let's look at the daily chart. And here's our daily chart. I'm leaning towards being bullish. I have a little bit of a bias towards being bullish. We're in somewhat of a channel here. Now, what this could be is a large bear flag. So we have here's like the flag pole where the market's moving down. Then we get this pullback, and then that leads to another leg down. We could be in that. I think instead the market wants to try to come up and get to this measure move. So we had this big bull day, and we've had a lot of consistent buying through here. The bulls have not really moved the price up that much over the last 2 weeks, but they've been very consistent. There's been lots of consistent buying. Most of the days closed higher than they opened, so that's good for the bulls. I think they want to get up to around 6,000 and test this measure move target. For trading next week, I think next week might not be too strong if it can get below Friday's low. So here's Friday's low, and it's a bear bar, and you can see we're having a bit of a double top. So here's one high pullback and a second high. We're testing the same level. Now we're getting this bear bar, and it's far from the moving average. So if it gets below Friday's low, I could see us having a 1 or 2 days down to try to come down and test the moving average or test this low. So that's something I would be on the lookout for next week. But that being said, it might not even go below Friday's low. It might just keep on heading up. And either way, I think we're going to end up somewhere up here around this measure move target. And then from there, I would say just we'll reassess at that point. But that's kind of what I'm looking at. So if I was holding a position long, I'd rather be long at this point. Then you can readjust. Let's say it gets back down here, it gets stuck below the moving average. Then you can maybe get short at that point. But I think for right now, it's looking like we're in a bullish environment. Okay, so now is the big announcement. Been working on the trading course for 6 months now, and it's finally complete and it's finally live. So the big trading course is now available. It has 23 hours of courses in it, and I'm hosting this on wap.com. Okay, so I'm going to share the link in the description. So you'll go to the Learn tab. Then you can join the big trading course, and this is what it'll look like. So we have 23 hours of lessons. This is packed. I mean, this has everything that when I was learning, there were things that I wanted to know, or things that I didn't know to look for, but that I needed. And so when I was making this course, I thought, what did I need 10 years ago? What would have accelerated my learning at that point? And that's what I put into this course. So let's click on an example here. So like this is a video on trading different times of the day.
Thank you for watching the big trading course. As U.S. traders are awake and trading. Often one part of the day
the course
can
goes
be
over,
subdivided into having
like I
two
said,
different types
I
of price
think
action. So you have this trading range here.
All the important concepts that I know I put in here, and it's 23 hours. So you can watch it for an hour a day for the next 3 weeks or more, and then would you be completing the course. But there's so much in it. I think you're going to need to watch it probably several times, or especially some important videos several times, and that's just kind of how it goes when you're trying to study. The course, so it's available on WAP. Now there's a discount code on Discord, and it's a very steep discount, and this discount is going to last for the next few weeks. So if you want a steep discount on this course, make sure you're a part of the Discord, and we have a promo code in the Discord that you can use on this course. The value in this course is beyond the price, especially if you use that discount code. You're going to get way more out of this than what the cost is. So if you want to get better at trading, I made this course for someone that wants to get better at trading. I made it really for myself, and I thought about, what did I need to know? What was I missing? And then this is what that course fills in. So I'll scroll through some of the different lessons here again, and you can see what there is. Like I said, this really is a complete course. It doesn't just look at one topic and then ignore the rest. I mean, this really looks at every topic that you need to, skip several years of your trading and skip several years of having to learn it on your own. They also have the supplemental part at the end. And this is really important, like how to study your charts, how to document your trades. It talks about best setups. That video is over an hour long. So these are, even just in the supplemental, this like kind of this bonus area, this is a really important, there's some really valuable videos in here. And I thought about like what were the changes in my trading that took me to the next level. And some of those ideas are in some of these videos here. And there are videos that are more important than others. Like I really think the how to study charts and how to document your trades, those are really important videos. But I was thinking, I mean, you really have to watch every video because there's little nuggets in every video. So like even like terminology, like even if you know my terminology, I think you still need to watch this video because there's ideas in there, and at least it's a beginner refresher. And sometimes it's good to just take a step back and just kind of work on the basics and kind of learn again as if you were a beginner. So every video has value, even for someone that's been trading for several years. So before I go, we're almost into the summer. We're getting into mid-May. The summer typically has lower volatility than like the winter does. The summer is the fewer trades are placed in the summer. There's just less movement in the market. So there's kind of a seasonal bias coming where the market is slower. Also, we're not out of the tariff environment yet, but we can see it's slowed down some compared to a few weeks ago. So we're probably coming into an environment where the volatility is a little bit lower, which is actually what I prefer. I've said this before. I like slower markets, like more boring markets. The setups are kind of better for what I like to do. So really, I'm pretty excited for the summer to be coming, and kind of maybe for the markets to start kind of slow down a little bit and get more towards their normal ranges. So I'm excited for the next few months. So everyone, thank you for watching. And like I said, if you want the discount for this course, join the Discord, and we have the discount code in the Discord. All right, see you guys next time.